Ian McIntyre from Pico Trading. Crikey, we've known each other for a long time. I don't quite know how long we have known each other, but it's a while. We're both still youngsters, of course, especially my good self. But hey,
yep.
So Ian, I'm so glad you're on the podcast that is David Anderson Talking Market Data, the show. As I say with all of my guests, I'm going to put both your LinkedIn profile and Pico Trading up so that basically the audience can click on those if they want a bit of background.
Yeah.
I am going to ask you to do a bit of an introduction, but I suppose I'm saying you don't have to do the whole thing because people will be able to look at that. So let us kick off. And again, I think we've known each other for a long time, and I think we would both consider ourselves to be working in the market data industry. Although one thing I note, and we chatted about it a second ago, Pico Trading is more than just market data. But as a segue, is Ian McIntyre more than just market data?
Well,
are you more than just anything? I don't.
I think so. And just in the build up to this conversation, it dawned on me that I think it's my 20-year anniversary in work this year. So
you're a baby.
Which is, yeah,
a baby.
It's scary. Into my 40s now, but yeah. So I mean, I guess my background has always been around market data, and I started as a graduate in a company called Wombat Financial Software. There's lots of people in the industry I've got that shared history with, and I've gone on to do very well. So, that really gave me a footing into, a lot of different areas in software, market data especially, and it obviously got acquired by the New York Stock Exchange. And that took me into various other corners of market data. I worked in Euronext for a while, sort of on the exchange side. And then, just more feed handler and software sales sort of took me into working at Fidessa, which I think was an important part of my career. And then subsequently into Ion when Fidessa was acquired, and then now Pico. So yeah, I've always sort of had a technical slant to my work. And I'm lucky to sort of had a cross section of stuff around exchanges, vendors. I think Fidessa can get considered to be a client as well. So yeah, lots of different experiences.
And I'm something we haven't talked. I didn't warn you to talk about this, but picking up on your accent, I've known you for many years. You're in Belfast, and there is intriguingly a little hub of market data firms and market data people in Belfast. I mean,
that's right.
Yeah, what's that all about? I mean, where did that all start? Was it Wombat? Wombat was a Belfast-based company, I seem to remember.
Yes, I think it's fair to say it probably almost entirely started with Wombat. I mean, Citigroup had a big office here. Yeah. Well, it's big now, but I guess back then it wasn't so big. And there's definitely market data staff around some other firms, but yeah, a lot of the more better known people in the industry, started in Wombat and have either stayed or moved to London, New York. So yeah, I think that's mostly where.
And then when you got Danny Moore and Options IT, which is a big entity, and that's Belfast. But it's just intriguing that you have got these pockets, not London and New York. There is more to life than just London and New York. So give us a little bit. Pico Trading. Again, I'll put the website up, and I've done a ChatGPT. I've got a 2-pager about Pico Trading, which is my little crib sheet for this conversation. But
sure, give
us the headline: Pico Trading. Who are you? What do you do? Why should we care?
Well, I'll have to do a good job here and impress my colleagues. So, Pico's it's a very diverse company. It's 15 years old now, and I think it's really grown into a global business. It's sort of more than 400 clients, and it covers a lot of different bases for, trading technology and as a concept, both for, across a very wide range of different clients, from exchanges, the buy side, the sell side, technology providers. There's 3 main business verticals. The first one is what we refer to as services, but I think that is a very broad area. So covering, hosting, colocation, connectivity to exchanges, to, our customers, counterparties, whether it's, their clients, their vendors, and all of the services that come around the edges of that sort of infrastructure and connectivity business. So whether it's us having staff in data centers helping you with your, installations and support, through to obviously us having relationships with all of the different global exchanges. So that's grew into a global franchise, and we have just shy of 60 data centers around the world and cover most of the world's liquid markets. The second business vertical is Corval, which is a well-known brand. It's a company that Pico acquired a number of years ago. And Corval is sort of a ubiquitous tool used for network observability, monitoring, latency, bandwidth measurements, and it's growing into more and more different areas to kind of add value to customers and break into new markets. And then the third business vertical is Redline, which is a very relevant business to a lot of the other things we do. It's a trading technology software business, sells feed handlers, execution for order entry products, very much focused around sort of low latency normalization of content. And we, sell that very often in tandem with some of the other products, like providing the raw data as well as the normalization of the software. So, quite a number of different businesses, all interlinked in different ways.
And it must be an interesting journey because I mean, I'm sure you've grown substantially organically, but then you've grown through acquisition, those two big acquisitions, Corval and Redline. And maybe at some point in the conversation, it'd be interesting. How does that work? Is the organic side easier? I mean, I lived through a lot. I used to work for Reuters and I've watched companies, and acquisitions can be a good thing, but you can get indigestion, if I can put it that way. It's not always straightforward. You've got people, you've got cultures, you've got different technology. So there's a skill to actually making acquisitions really work.
That's fair.
Maybe we'll come on to that. From a market data perspective, because this is David Anderson talking market data, but I think it's fair to say that what Pico does is not just market data. You do the entirety. You do the trading side as well as the market data side. And all the things you just talked about have both a trading and a market data perspective. Again, I've just done one of my training courses, and I use this little expression, view and do. In the good old days, or maybe it was the bad old days, market data systems, market data services were on the left, and then all the trading stuff was on the right, and a person, a human being, would do all the market data stuff and then have to switch to do all the trading stuff. And I think it's interesting, and you're one of the advocates of this, of sort of wrapping it all up together. But one of the words that I picked up when I've done my research on Pico is low latency. That seems to be at the core of what you do, what you offer, what you tap into. Two questions there. I mean, latency isn't binary; it's a whole spectrum. Mm-hmm. Are you addressing the entire spectrum? I mean, do you try to service customers who have no interest? Want normal latency, really don't care about latency at all, or are you really? Is your focus entirely on people who are very, very keen to have low latency, very low latency, ultra low latency?
Yeah. So I think the answer is probably yes, that we do cater to all of those different types of customers. Now, there's a common theme, which is that typically the clients that we help the most are clients that want to connect directly to markets. Now, connecting directly to an exchange, I think if you rewind the clock 10, 15 years, typically would have been, the use case for that would have been probably led by needing low latency.
Yeah.
And obviously there's a whole different range of vendors that kind of built their companies around that fact. The reality kind of, I think in the modern day, is that people connect directly to exchanges not only for that use case now. And this is born out of a number of different reasons. One of them being that, if you rewind 10 years and you built a direct feed environment, well, more than likely you were a big firm that were paying many millions of dollars to some of those other big aggregators. And you might have had many hundreds of applications connecting to those, historical vendors. but you've also now built this direct feed system. So, application owners in the banks, for example, would have had choice. They could have connected to the direct feed environment, assuming it had the content that satisfied their application's needs. And they could avoid maybe paying a larger license fee to the kind of bigger consolidated vendors. Got some better performance, et cetera, et cetera. So I think, as direct feed environments matured, companies find different ways to utilize them in order to reduce licensing costs, and just be more efficient. Now, when it comes to the kinds of clients that we sell to, and like you said, it is a spectrum, and at the very far end of the spectrum, there's companies that don't tend to outsource anything. It's all built in house because it has to be completely bespoke and are caring about the kind of
the sort of high frequency trading world, that world, yeah.
Yeah. But even within high frequency trading, there's a segment that just simply do it all themselves. But even some of those clients are our clients because, we can, well, certainly in some slightly awkward jurisdictions, Japan's a good example, where we'll host those extremely sophisticated clients. They'll get connectivity to the exchange. We'll buy it. It will be entirely dedicated to them. But we're still providing a service and obviously, having a certain, wrapper around what we offer them. A tier down from that would be obviously high frequency trading type firms, but potentially not with the scale to have their own IT department of a certain size where they're going to do it all themselves. So, using a vendor like us, our services then need to be fast and satisfy those kinds of requirements. And you go kind of further into things, you get into the sort of the tier one banks that obviously have latency requirements, and maybe not often as hard to achieve as some of the sort of more sophisticated buy side firms. And then all the way to some vendors, for example, so like ISVs, some of the sort of mid-sized vendors that they can't buy their data from another vendor, they have to go direct. But their product ultimately might be a desktop display.
Yeah.
So they don't, like the microseconds don't really matter, but their requirement is they must go direct. So, there's all of these different types of clients, but like I said, there's sort of a common denominator there that the requirement is they connect directly, and latency is kind of often somewhere along the journey there to discuss.
This is quite confusing in a good way, but it is. There's a lot of little sort of nuances here and there. Again, big picture, you've got this direct connectivity, which is contrasted and compared against taking data from an aggregated / consolidated data vendor. The classic. My old mob, Reuters, that's now become, well, just to confuse things, London Stock Exchange Group. Data and analytics, the old Refinitiv bit, is their aggregating data vendor, then Bloomberg and FactSet and there's many others. And again, it's interesting what you said, that obviously the bigger sophisticated, the tier ones, the bulge bracket firms take both. And a lot of firms probably have a mix of both because they've got different user groups who have different requirements. And then you've also got, when you're dealing with smaller companies, as you just described, you've got very niche specialist companies who've only got sort of one permutation. But again, I'm trying to get my head around this because, if they're talking about direct connectivity with you, and again, when you talk about this direct connectivity, I presume you're talking two-way. You're talking about extracting and pulling down all the market data from that exchange.
Yeah.
But then also, are you talking about being able to place trades on that exchange as well? So it's a two-way. And you already thrown in the words colo. Now, if you're doing something, where do you fit in on this? If colocation is where applications are sitting actually in the data room in an exchange, as close as it possibly can be, obviously typically to avoid latency. Where does Pico fit in? If a particular bank or high frequency trading firm, they could run their own applications in that colo, but am I picking out that Pico could have a wrapper of management around something going on in that colo?
Yes. So there's lots of different reasons. mostly to do with, efficiency. If a customer is looking to go into a co-location facility, what would they have to do for themselves? Like obviously there's a procurement angle to it. They're going to have to go buy space and buy connectivity, understand the options, which, when you're obviously going to different countries, like Japan's a good example, and there's many others, but, understanding what is on offer, there's many options. Are you going to pick the right one? So just having a partner that has experience and understanding of what the landscape is kind of step one.
So that's an
Beyond
advisory.
that,
Yeah.
yeah. So there's a like yeah, but again, like if you buy anything from any company, even if you go to buy a TV or something, like you expect the person to give you some advice. So like
Yeah.
that's maybe table
Yeah.
stake stuff, but it's important. And then from that you start to think about how the practicalities. Are you a company that has an ability to purchase things in that country?
Yeah.
Sometimes that's not the case.
Yeah.
And then um, even if you were resourcing, have you got your teams ready to kind of go and do this work? Do you have staff? Or it's just a classic outsourcing play? Um, but also, there's sometimes a matter of scale. What if you just want to put a couple of servers there? If you go and do it yourself, typically you have to buy an entire cabinet or two for resiliency, depending on how you might architect it. So there's a matter of cost. Like, we would typically buy, a space that is like a shared space, and then we will host many clients in it. So it can be more cost effective. The telecoms can often be very expensive. So if we have to buy the telecoms to service Pico's clients, but our clients can then use them. If you go yourself and do it all yourself, you have to buy your own entirely dedicated telecoms, which again can be expensive. The connectivity in and out of this place, um, you might have to, communicate. You might have to upload your software binaries and all, management traffic. That's probably going to be leased line networking back to your office or another data center. Again, if you have to do it all yourself, it gets expensive. So, we've got all of these things in place that, you can effectively use as a client, and it can be a more cost effective way of doing the same thing.
Got it.
Working with a specialist partner. And also then there's a matter of consistency. So, this is rarely something that you do just in one place. You might be in 10 colos. So what if your vendor just has that same approach in all of these places, and you get this ability to kind of deal with your whole environment in a very consistent and structured manner? You're not buying 10 things in 10 countries that actually maybe 100 different invoices you'd be receiving. You just get one bill from Pico. Well, obviously, maybe not, but, within reason, we're simplifying it every step of the way. So, there's a lot of benefits to working with an outsource provider
And
for this kind of infrastructure.
help me out here. I mean, on a contractual legal level, is Pico Trading the quote unquote member of an exchange? Is the contractual relationship, so you're just an advisor,
Yeah.
a
We're a
third
technology
party?
company.
Yeah.
Yeah, we're a technology company. So, no, not a member. Although I do, long before I joined Pico, I think the very early iteration of the company was that it started as a broker dealer in America, but
Got. Yeah, I thought I
that's
remember
more
that.
a story that's told now rather than anything else. Because I think just in the very first startup phases that was the case, but no, that's long in the past. So yeah, so no, that's definitely not the case. But the subject of membership is important because very often the rules set by the exchanges mandate
Yeah.
which clients can go in, and even like a non-member can be in the colo, but they might not be able to trade directly.
Well,
They would need to work with a
because
broker.
you don't need to
Um,
be a member to get the market data. And that's a question, but I think you do need to be a member to trade. Again, this is
yeah.
testing my knowledge a
Well,
bit.
no, there's no. I mean, it's part of what keeps us all employed, right? Like none of these exchanges have the same policy, so you could
Right.
have
Yeah.
a total. They are all different. So every environment will have its own set of rules and conditions, and there's some exchanges allow non-members to connect directly. More of the sort of primary markets
Yeah.
wouldn't, and that's where the brokerage community build low latency systems to, to allow their clients, the
The
non-members, to trade
direct
through
market
them.
access, DMA,
This, yeah.
DMA.
So
Yeah,
this concept of sponsored access, yeah.
yeah.
So they're sponsoring their client effectively, and there's a whole sort of technology framework that underpins that.
But you can come in at all the different touch points and I either sell technology and or sell advice and or sell managed services. So the television analogy, yes, you could advise somebody how to set up the color and the sound and the what, how to connect it. Well, people don't connect it with DVDs, but with the cable or the Sky TV or whatever. Or
Yeah.
do you invite a Pico Trading person into your lounge and they do all the setup for you and they stay there? And if it stops working, they'll tweak the color. I'm obviously terribly mixing my metaphor, but
Well, yeah. So no two clients are alike in this industry, and I think the more you work around selling these services, the more you realize that like no two sales are ever quite the same. So, some customers want us to do absolutely everything. Some customers need our help in a lesser capacity. And I think, part of Pico's success has been like a consultative approach and learning, where the lines get drawn between our clients and how they're all different, and figuring that out pre-sale so that you can kind of, structure something that we can provide that best suits their needs. Um, but yeah, I mean, definitely like that statement I said holds true. Like, no two customers are quite the same.
let me
Um,
let me pivot a little bit. I mean, I'm quite happy. I'm delighted we've done a mini sales pitch for Pico Trading because it's an excellent company and you're a good friend of mine.
that
But
is true.
what swerving slightly off that trajectory. I mean, you guys are in the thick of it. You are there. Colos, low latency. What are some of the trends? What are some of the big issues that you are seeing in 2025 or in the last couple of years and coming? What are the trends?
Yeah,
What are the difficulties that you've seen out there that you've jumped to the rescue on? What are the big issues at the moment?
I think probably the biggest trend that we've noticed has been like a sort of slow emergence of the need for low latency around fixed income, particularly in US Treasuries, and where Pico had a lot of support for US Treasury kind of connectivity. Um, there's been quite a number of clients have been building out systems to kind of implement low latency software. So in the past sort of 12 to 24 months, if you had to pick like an interesting theme and like an area that people have been investing where previously didn't before, I think that would be my pick. Um, and that's been an interesting set of challenges for us because, as a software provider, working with a new asset class, it's rare, it's never the same as the ones that you're more familiar with. Fixed income comes with a whole range of different,
Where are the
complex
venues?
requirements. So
I mean, if you're talking about US treasuries and you're talking about the very liquid ones, fast moving ones, again, I should know this, but where is that trading? Is that done on New York Stock Exchange, or is that an IDB, or is that one of these things like Market Access or TradeWeb? Where, where is this fast moving fixed income data coming from?
yeah, so I think part of the trend has seen a number of the main liquid venues start to look more like what we know as the equities or listed derivatives market. So, having a colocation, which
Yeah.
wouldn't have been a thing, um, having more sort of latency sensitive connectivity options, um, in terms of where they're in the main financial centers for the most part, the NY4 in Chicago. And there's been some acquisitions around this space on the exchange side. So yeah, it's starting to kind of resemble more like, at least at a connectivity and just data center level, what some of the more sort of liquid equities and listed derivatives markets look like. Um, there are more sort of complex market structure dynamics, and I think they're also kind of playing neatly into some of the areas that we can help with. So, there are, you know, um, a number of the, let's say, market maker, high frequency trader type firms that have their own like liquidity pool that you can trade against. So that's another set of markets almost getting created that clients need to connect to. Um, so there's probably a list of 10 to 15 venues now in US Treasuries that, you, as a client serious about trading these with, some sort of algorithmic
And
strategy,
and
you're going to need connectivity to a lot of them.
and let's not get political, but I mean things that have been going on in politics. There's a lot more on the mainstream news about the bond markets and yields
Yes.
changing and yield curves becoming inverted, or is that part of what's driving it? Is because the bond markets? Unfair question to throw at you. You're more a technologist, but I don't know. It's an observation. There's been a lot more talk about things going on in the bond markets affecting sort of macroeconomics, affecting the markets overall. I mean, that sort of balance between equities and
Yeah.
bonds. I don't know. Again, in my world, everybody seems to talk about equities all the time. Equities, equities, equities. So, and I don't know, fixed income. I've got to be careful with my words. Was it a bit slow moving, almost a bit boring? I don't know. That's sacrilege to somebody who works in fixed income, but I'm just.
Yeah, I don't know. I mean, like you're right. I mean, I'm far from qualified to talk about the sort of macroeconomic reasons behind some of these things, but I can speak to what we've seen in terms of demand. And like I said, in the US, the treasuries market has been, one of our hottest areas. We've got a number of customers in Europe as well, looking at European bonds and how to,
Right.
particularly government bonds, and how to sort of modernize their technology around that. Um, so yeah, I mean, in terms of I mean, if you go to any conference about fixed income, and I've went to a couple because obviously as a vendor, seeing interest in this area, we've been keen to learn more ourselves.
Yeah.
And the theme about, the electronification of the fixed income market is, like people that work in fixed income would tell you they've been hearing that for like 15 years. But it seems, there's material changes happening because vendors like us that have traditionally operated around other asset classes are getting calls and being asked, around technology projects. So, it's an interesting development. And I mean, for us, obviously, hope,
And
it
what
continues.
I'm picking, what I'm picking up, because in a sense, I remember, because I'm old enough to remember, I hate saying this word, the electronification. I managed to say it this time, of the stock markets. Because I remember being a Telerate salesman in the late 80s, and the London Stock Exchange was my account. And there were still people with top hats going around as
Yes.
jobber, and then it all became electronified. And then the equity markets, because of that electronification of the equity markets, it became self-fulfilling more and more. And I suppose that electronification of the fixed income markets has enabled the markets to get faster. And
Well, yeah,
you
it's fair.
couldn't.
I mean, from what, like, obviously, also, like, fixed income is so broad. There's so many different types of instruments that you're describing here. So, like, as an asset class, it's immensely complex beyond equities. Now, there's obviously things like corporate bonds and other areas
Yeah.
that, and the liquidity dynamics are completely different
I mean, there's an
because,
enormous amount of illiquid bonds.
yes,
But I
and
suppose that's not what you're focusing on.
no, no, it's not. And that's where, you can get lost in the detail, trying to generalize some of these statements because, one trader's life will forever be completely different to somebody that's writing an algo in US Treasuries. So, yeah, I mean, who knows? I mean, I don't know enough about all of that other
But
sort of
no,
voice
I think,
trading area. I mean, it's massive, but it's a whole other world to me.
yeah.
But, this part of, at least on the government bond side, it's become liquid to the point of, being very relevant to some of the stuff that we sell.
Yeah, no, and I think we as an industry, I admit this myself, are sometimes too fixated on equities, and we need to
Yeah.
look at some other markets. So that is really interesting. Let's delve into a couple other things. So two other things that I'm conscious you do. There's more actually. We'll come on. The whole telecommunications side of things. I'm finding this interesting. The direct connectivity. I mean, you could, if you are XYZ entity, whether you're a high frequency trader or a bulge bracket bank, whatever, you can arrange leased lines between you and an exchange. You can actually have that literal direct connectivity.
Yep.
or you can somehow connect via some sort of extranet. We've got our friends at
Hmm.
BT Radiance, our friends at TNS, who are apparently going to merge. That's something I've
So I
just read
hear.
about. So that's it. I mean, where do you guys, Pico Trading, fit in that story? Are you piggybacking on those extranet providers and providing services, or are you? Forgive my ignorance here. Are you one of those? I mean,
Yeah. So yes, we are, and no, we don't. We would not use any other network vendors like the ones that you mentioned or any others. People, companies would use Pico's network
an extranet.
traditionally.
Would you call
Yeah,
it
an
an ex?
extranet. So
Yeah.
yes, that is a term that gets used. So um, I think the genesis of what Pico built was to be basically a faster version of what you're describing.
Right.
Now, faster meaning what? If you're connecting, if you've got something in London and you want a connection now to Euronext, which is in Italy, of course you could get that from any of these providers, but what paths are they using? If you've got an algo like a smart order router, like the latency matters. So, what route are you taking to Italy? Has somebody investigated to make sure it's the fastest route? What network equipment are you using? Is it designed for high bandwidth multicast data? Um, the answers to these questions with Pico are yes, because some of the large firms that helped us design the network initially had extremely stringent performance requirements. So over many years of taking that attitude, we've built an extranet, if you want to call it that, but it's designed very much for speed performance.
Oh,
Obviously,
so
with some of the tier one firms that we're servicing, you have to get that, but you also have to marry it with having, extremely stringent resiliency requirements, DR, et cetera, et cetera. So yeah, so I think yes, it is similar to some of those kind of big brand extranet vendors, but it's been built with a different angle and
yeah.
starting
Well,
with
it's like
and
you know,
the high
a
bandwidth,
Ferrari's a
low
car,
latency
a,
requirements.
a
Yeah.
Ferrari's a car, and a Skoda is a car. Both cars with four wheels, but also the Ferrari costs a lot more money than the Skoda.
Well, that
Does
is fair. So yeah, so the I'm not saying Pico costs a lot more money, but it's definitely not built equal. Um, but it's a very transactional area, and for sometimes customers look at different vendors and assume they're getting the same thing, and therefore try to kind of look at pricing in that same through that same lens. But yeah, it's something that we have to kind of impress upon people and explain the design, how it's different. There's going to be a different experience, a
so
different
okay?
performance,
So not
etc.
all extranets. I mean, that's the key takeaway. Not all extranets are the same. Conceptually, what an extranet is well
Yeah.
understood, but there are different variations on that theme. No,
Yes.
I get that. And again, I think you're playing into that Ferrari angle. You're playing into that, low latency, faster route to get your trades, etc. So again, I understand that people should ask the right questions and compare and contrast accurately. Okay, so you're doing that, and then again the Redline. When I was looking at your the little snapshot of what Pico Trading does, and you acquired Redline. But I mean, if I understood correctly, is Redline, or is one of the things it is, an aggregating data vendor? Is that, did I pick that up correctly?
Um, Not well. I'm going to
Not,
say
I
yes
didn't.
and no.
You, okay.
Um, because no, I mean it's not like it's not like
A
a
B
B pipe
pipe.
where
Yeah.
you're going to get 100 markets over one single connection. Um, so Redline's predominant use case is where customers, have their own telecoms, whether it's an extranet or often in colo, and the software that we sell is basically running on a server that the customer controls, um, and it's completely bespoke to them. So
Okay.
unlike a shared, a consolidated feed, which a company installs once and sells to many people, there's a kind of dedicated bespoke nature to what the Redline software is used for. So And importantly as well, like there's reasons for that. The main kind of way that it gets installed is that the feed handler technology would be basically installed on the same server as a customer's application,
Right.
and those two systems would communicate using the shared memory on that same server. So you're literally running this on the same server as the customer's algo. So this concept of sharing, it just isn't a thing in the most part. Now, if you think about the other kinds of things that Pico sells,
Yeah.
so what would you need to build a consolidated feed? Well, you would need normalization software. You would need to be a licensed redistributor. You would need telecoms to the venue. You would need data center hosting, server management. Like these are all things that Pico offers, and we do in certain cases provide like a managed normalized service for clients. So the way I like to think about it is,
yeah.
yeah, so the way I like to think about it, and the cases where we've used this is where customers get frustrated with the consolidated feed vendors because it is inherently something that you're using as well as many other people. So if you go to that vendor and say, I need something tinkered with here because I need the order books to look different, or this field is missing, or things like that, it can often take very long or not be possible to help them because, again, that consolidated feed is designed to service many people, not just that one person. So what we do at times is install Redline inside of our environment and basically run it with the same licensing framework as a consolidated feed would have. Basically, the customer is getting over a connection a normalized stream of data, but the publisher is entirely theirs to fiddle with at will. So they want the order books to send randomly 13 levels of depth for some reason, or maybe 50 or whatever it is. They can change that themselves. This publisher is entirely theirs. And it's kind of like a dedicated consolidated feed, if for want of a better term. So we
Yeah.
do that quite frequently, to be honest, and it's been something that's been quite successful marrying the Redline technology and all of those Pico assets together. We've stopped short at building our own shared publisher. We do have it for
Because
like we have
there's
it
a
in
lot of other
Japan.
people doing that. There's a lot of other people
There's a
already
lot
doing
of other people, and it's an expensive, it's a build it and they will come,
it. Yeah.
and it's a very saturated market. Now, we do have it in certain places. So we've got it in Japan where the market structure lends itself to that being successful. We've got it for like the consolidated tape in America, CME. We're putting it into London as well for various reasons. But yeah, it's not like it's
I
not the
mean,
same thing. It's not
you
a
you
it's not a
are
B pipe.
you're more specialist and less generalist. And again,
Yes.
I keep playing my Ferrari analogy. I know you're keen to say that you're not crazily more expensive than everybody else, but surely logic dictates you get a more specialist, bespoke service. That is going to cost more than a general. It's horses for courses. And you pay for what you get. I mean, I know
Yeah,
you're
and look,
enormously well priced, obviously. Obviously, I'm not trying to
yeah,
get you to say you're
more
bloody
maybe I
expensive.
don't know. I'm trying to think of a better car brand to
Yeah, yeah.
be a high value and
You're an
good
Audi
pricing.
something or an Audi.
BMW or something.
Yeah,
I don't
yeah,
know.
high end. I know what you mean.
Yeah.
I'm again. Once you go on analogies, it's a dangerous thing if you overplay them. Let's talk about another of the areas that you operate in through acquisition, the
Mhm.
Corval acquisition,
Yes.
which is a lot more a sort of system monitoring tool. Will you tell? I mean, where does Corval fit in? And without just doing a full-on sales pitch for Corval, that whole space, what is the problem domain? What Corval obviously solves it, but try and spend more time talking about what the problem
Yeah.
is that's being addressed.
Well, I mean, it is hard to keep it concise because Corval gets used by so many different types of clients.
Yeah.
But I think obviously in capital markets, one of the areas that it focuses on a lot is, you know, network observability in terms of just being able to understand, the devices on your network. And for a network engineer in a firm, having a tool that allows them to troubleshoot problems. So a trader complains that their um, there's latency, or my fill, it didn't work for, there was some problem with my trade.
Yeah.
Um, Without something like Corval, they're left trying to decode raw data, figure out where, if a packet got missed, or, how do you work out latency? It's incredibly complex. Latency can get introduced in so many different ways. And, when you install Corval in a network, it provides you this ability to just zoom in on an issue, immensely quicker. So, the time to resolution for some technical issues is massively improved. Um, so there's I'm going to say like an operational support style use case there. Um, there's also just an observability use case. So in terms of market data, particularly, Corval has become a very widely used tool because, it does have competitors, but a lot of the other competitors are, they don't have this important layer that Corval has, which is almost like a mini feed handler. And
Okay.
so if you listen to a network, you just get lots of packets and they get dumped in a big file, and you're trying to, you as a network engineer would have to go and figure out how to figure out what's going on there. Corval knows it's the NYSE open book protocol because it's written some code which understands the feed protocol, packet structure, and goes in and looks at the information in the packet headers and other areas to effectively be able to kind of, go a step beyond the normal network troubleshooting and actually make it relevant to the data feed itself. Um, that allows you then to start to look at bandwidth. So how large is this feed? Is my capacity correct? Um, Obviously allows you to look at latency for the particular protocol. So that trader complaining about his trade, well, you can quickly go back to the feed that he's using and start to find out stuff. So it's a very relevant tool in the workflow of the front
And,
office,
and I
both
asked you,
for data and then also for trading.
and I asked you a question when we were sort of chatting before this call. Isn't by the sheer act of observing interfering? I mean, you shot me down straight away, but I'm still going to repeat the question so you can shoot me down in public. But isn't
Yeah.
once you observe something, if you're an observer, you're somehow affecting the system?
No, no. So it basically passively taps the traffic so that there is no effect on any of the messaging or the data flow. It listens,
Just listens.
doesn't interfere.
Got it. Got it. Okay. All
Yeah.
right. Crikey, where else do we go? So we've talked about Corval, we've talked about Redline, we've talked about low latency. What else? What else should we talk about? What else are you seeing out there? What's going on out in the big wide world of market data specifically? Where else are you seeing problems that need addressing?
Um. Well, wow. I mean, like, there's always something going on, right? So, I mean, there's been quite a
Well,
lot.
actually, I'll hit you with two words that are hot: cloud and AI. I mean,
Okay.
in 30 seconds, just no, I'm teasing, but they are big issues that we're all wrestling
Yes.
with. How do you wrestle with them? How does Pico
Well,
wrestle with them?
yeah. So cloud, I guess it's another place that customers install systems. So, it's been very important for Pico to have connectivity in and out of clouds. Provide some managed services around cloud as much like we do in a data center. So, I guess the buzzword stage has passed maybe, and it's just became a bit more normal that, you have services and offerings that support what clients need around this. And then AI, we're like deep in the middle of the kind of hype phase, I suppose. But there are really practical problems to be solved with it, the technology, and the main area that I think Pico is focused on with AI has been around Corval,
Right.
because you install Corval in a network and there's just millions of packets, and ultimately, if you're anyone using a tool like this, it's hard to get through the noise and work out, if there's a
Signals.
1,000 alerts, what are the ones that you want to care about? So putting AI technology around that problem there's endless ways to improve its usability. So that's been a big focus for Pico, and we've got engineers working on a whole variety of different tools and offerings
Because
that'll.
I suppose there's an analogy, isn't it? Things like radiology, X-rays, AI in medicine has been really useful because AI can spot things on an X-ray that a human radiologist could never see. And I presume,
Yeah,
effectively, Corval's like an X-ray machine on the system, looking in on it. But you've got to have, how do you spot what it means? What's going
yeah.
on?
Or
Yeah, what's in
even
an
even things that are happening on a daily basis that are too small to pick up maybe, but if they happen 5 days in a row, think like there's all kinds of things, but obviously it requires you to kind of collect the data and have the ability then to kind of store it and analyze it in the way that, obviously, AI is obviously best at. So yeah, there's
that
endless
makes
applications for it.
but I mean, going back to cloud, I mean, cloud. One of the observations I've come to hone in on is that cloud is great. There's lots of fabulous things about cloud, but it hasn't really been seen as a solution in the low latency space. I mean, when you're talking about data, market data in the cloud and what have you,
Yes.
there's a lot of focus on things like, time series, tick histories. It's very good at big lumpy data sets and doing stuff
Yeah.
with them, but it's not. I think the cloud providers say this themselves. It's not really, it doesn't lend itself yet to ultra low latency. I mean, there's the issue of multicast in the cloud.
Yep.
That's been an ongoing topic. I mean, again, uh, where you're sitting, where Pico is sitting, thoughts, comments on that?
Yeah, I mean, we use cloud to store all of our history. We do sell historical data, so it's great for that. And obviously, it's cost effective and makes the files easier to access when we do sell them. So there's a really useful practical purpose there. The low latency conversation has perplexed me from the outset. Um, Part of it, I think there's an element where um, any of these big like Google, Amazon, like they're massive, like they're so much bigger and like they could just drop $1 billion and decide to fix this problem, but they haven't so far. And but you do see these big deals being done with exchanges, and I
Yeah.
think ultimately that is the key. And where those partnerships go will probably drive what happens, in my opinion. So if the CME decide to put their matching engine in the cloud, now my understanding is loose around that, but I've not heard anything to suggest that's actually going to happen. And they've obviously got Aurora, and they've got a expensive data center where there's lots of clients in Colo, and there is no answer to the latency question for cloud. And
No.
a big part of, a big, like the regulator, I presume, of all these exchanges, like a critical mandate is, to the exchange, you must prove that there's fair and equal access. So everyone's cable has to be the same length. And, when you go into cloud, like unless those big cloud providers just create some sort of different offering, but then why be
I
in
think
cloud
it.
at all?
I
So it's a confusing one, and I don't have the answers, but it has
No.
perplexed me. But there's enough um, business surrounding this area that you would think the
I
cloud vendors would be interested. But somebody told me recently, like I think they were counting up the cabinets in a one of the data centers that we all care about, and I don't know how many. It's like hundreds of cabinets, and they were making the point that when Amazon and Google sell to like one of these big tech firms, the amount of technology that gets used by a Netflix or like any of these firms is like eclipses capital markets.
I
So it's
I
actually not
think
that interesting to them. I don't know.
I think you're right. I think we think we're awfully important. The market data industry, which is a subset of the capital markets, we all,
Yeah.
but actually in the grand scheme of things, we're not that big. And I don't think one of those big providers, yeah, they've got $1 billion sitting there. But if they plopped $1 billion, they're not going to make $1 billion or make a billion and a bit. So I think that's why they're not doing it. I mean, again, that's a vast
Yeah.
oversimplification of it. But again,
It is, and I feel bad even saying it because, I'm sure there's people in the capital market departments of the cloud vendors spend their time pursuing this. And I'd love to hear more from them. Like I've heard them talk over and over about these subjects, but I
I
just don't
think
really see the pull to get the exchanges to move. I
I
just don't
know
see it. And
it's a chick. Is that chicken and egg? I don't know, but there are. Again, I like Oracle. I've had a lot of contact with Oracle recently. I like Google. I like AWS. I like them all, but Oracle had some interesting things, and I think they had late mover advantage where they've sort of sidestepped multicast. Multicast, and I couldn't repeat to you why multicast doesn't work effective. It's a lot to do with that fairness, thing.
mm,
Um, but there are ways of sidestepping it. So I think we will see sort of changes that will come through in the future. But I've suddenly looked up at the clock and I'm sort of thinking we're creeping towards the end of our allotted time slot. So I think this is a good opportunity for me to throw that question. What things would you like to share with this audience? The sort of conversations you have with lots of your clients when you're out there talking and you just haven't, because David's wandered off in all different directions in this conversation, as I am wont to do. But you're in control now, Ian. You can talk about whatever you want. So say, hit us with a couple of really important words of wisdom. No pressure.
oh wow, I feel pressure. Well, I mean, I guess the thing that we sort of touched on a little bit about how customers are using, direct feeds to reduce their costs. I think that's a really important subject that we've talked to clients about a lot in recent history. Now, like you pointed out, everybody at a point considered accessing raw feeds and direct feeds as a low latency play. That sounds expensive. But if considered in the right structure, when looking at like a bigger picture around your data consumption, taking into consideration other vendors, we've been looking at helping clients in a number of different large projects with sort of global consumption of raw feeds. It's not a short-term fix, but it's definitely a way to reduce cost. Um, you know, just to keep it snappy, like another important area for us is sort of the education for customers about extranets and why they're important. Um,
And the differences
uh,
between them. They're
yeah,
not,
the
they're all,
differences, yeah. But like we find a lot of customers still go to each exchange individually themselves, and there's a lot of hidden costs there.
yeah.
I think, like certainly in, FISD, it's a forum we're both very familiar with, but a lot of the focus tends to be around market data policy and licensing.
Yeah.
And there's this, acute lens on the cost of market data licensing. And obviously it's an endless subject. But, some of the maybe savvier exchange product managers, you can't really get away with increasing the licenses every year by large amounts because there's so much attention on that. But connecting directly to exchanges yourself comes with now a range of not hidden, but maybe I'm going to explain my context for saying they're hidden in a second, but a bunch of technical fees. So fees around the telecoms, the logins that get very expensive very quickly. Um, I've had conversations with many a market data manager, and because those technical fees aren't market data license related, in a big firm, they're not getting approved by the market data team. They might go into the network department or somewhere else,
Yeah.
but you know, the market data people maybe responsible for some of these environments aren't necessarily getting a full view of the total cost of some of this technology and how it's changed and crept up and how exchanges have kind of slipped these fees in. So I think, moving to use a consolidated network is a strategy to reduce cost in general, but even more so now with some of these technical fees that exchanges are starting to charge. Um, certainly in pockets of the industry, like in US equities, there's like, 500,000 plus in savings out there just connecting to the main markets through a consolidated network. Um, and maybe the final thing that, just in terms of themes and trends, um, in the States, there's been this buzz of activity around new markets operating
Right.
around US equities. And
Well, the 24/7 type stuff.
well, there's the 24-hour stuff. Um, there's others. So there's was the Green Exchange is focused around
Yeah.
like sustainability. There's, I'll not list them all, but there's
No.
from it being a relatively stable kind of market structure for a period of time. There's obviously all of these changes around the SIP that are coming, and then layer that on, this whole range of new markets and their different sort of angles to getting clients to trade with them. So, that's probably, in the past sort of, I'm going to say year, it's been like a news cycle. Now, a lot of these companies are getting to the stages of having technology and getting members ready. Yeah, so
So
we've
it's a
seen quite a lot of
maturity.
interest.
Yeah.
Yeah, so, but it's an interesting dynamic, and I think 2026 is going to bring, those markets are going to start to get a little bit of liquidity once they go live. And, we've seen, an increased demand. So we've been working with quite a lot of those firms to get them onto our network.
Okay.
And I think
Yeah.
that's going to be a evolving story over the next year or two to see how well they all do.
I forgot to ask about something, so I'm going to throw it in at the last 3 or 4 minutes, and it's an enormous topic, so we'll just touch on it. Operational
Yeah.
resilience, and I'm thinking if you're in Europe, there's a thing called DORA, and the
Yes.
high level gist is government saying the financial markets are really, really important to our economies, and we're going to put some rules in place to make sure that the operators in the financial markets have high rates of uptime. Their systems are really resilient and reliable. I mean, are you seeing that, hearing that? Is that a good thing for you? Does that put onerous duties on you? I mean, where do you play in all that?
Yeah. So yes, I mean, Dora's obviously come up a lot. I think customers, go to their vendors with, expectations around, well, first of all, there's the practical side of it, like having a system that is resilient. And obviously, we're supporting some of the largest firms in the industry, and it's a bit of a given that we've built a system to cater for
But you have
that.
to prove it. You have to somehow
Yes. So
document
there's
it.
exactly. So there's the practical side of it, which there's no problem. And then there's the kind of paperwork side of it where, there's back and forward to prove it, like you said. So yes, there's a lot of that has been going on. Obviously, a lot of our clients are trying to understand what they have to do and the necessary paperwork. So we've been working with all parties on that subject.
And we all love paperwork. We love a bit of paperwork. So embrace it and for what it is. Look, Ian, we've come to the end. We could have gone on. We'll have to go on, you and I, at another time over a beer sometime. But everybody else won't
Anytime.
get to hear all of that. So look, I want to say a fabulous thank you for doing this. It's been enjoyable. I expected that it would be because you and I chat a lot offline. So look, don't hang up on me because I'm going to stop the recording in a second, but I want to say thank you
Yeah.
and cheerio for now.
Thank you. Thank you for having me.